Wonderful morning to everyone. This is a last week of March, mixed of the first week of April. The total March month, irrespective of the current geopolitical concerns, it has changed its pace from the bullish March, which has been proved by the NIFTY Sensex. For the recent years, every March, if it should be, that was bullish only. But the first time it has changed its phase, which is a very crucial signal for the ongoing March month in every year till 2027. And if it is closing the March month for the 2027 also in the negative, probability will be very high for the markets till 2029 to 2032. Till that period, the probability for the markets in India would be having difficulties to prove a double-digit return, or otherwise the growth may be getting capped when compared to the previous 8 to 10 years. That cycle may be getting started if the 2027 March gives the negative return on Nifty and Sensex. So that's the first important long-term based behavior analysis based outcome we want to start with you. Based on the current scenario, of course, the markets not settled yet. Why? Because of this ongoing conflict, the increased conflict between, even though the talks are expected and that may be expected to be cooling the current situation but that has not happened yet with a clarity manner. Because of this increased conflict and ongoing war, it is widened negativity or pessimism surrounded for the markets as well as the economy that would be having an impact even for the next 6 months. That may be impacting the markets as well with a limited growth, or in some sectors directly correlated with this crude oil prices, as well as the trade and commerce related, particularly on the export side. Those kind of sectors would be highly getting impacted in terms of growth, and that growth may not be having an impact in the near term with a developed manner. Because of this impact happened on the every business under the segments we have been discussing, that is very correlated, closely correlated ones, that may not be having a chance for giving a improved manner of when compared to the previous 3 years or 5 years, and even for the recent quarter of December's one. By comparing these numbers, the forthcoming quarters starting with till the next few quarters also may be expected to have a dent on the sales revenue, profit, margin, as well as in other terms. So that is our financial based analysis, and based on the financial behavior, the companies which and all sectors which and all have impact in the near future, like we have provided the data for you. It is 30th of March 2026. We are discussing about the pre-market outlook for the day. Though it has completed the final week of March, full total week of final fourth week, it was happened in the way of a negativity, even though the markets recovered somewhat during the midweek and it has given up the gains it has garnered in the final day. Anyhow, because of the actions, the markets consecutively for the fifth week closed in the red. If it have somewhat resisted the or somewhat reduced the flow of negativity during the third week, the fourth week might have happened in the way of positivity, but it has continued to close in the red for the fourth week also. Because of that, the fifth week wanted to be closed in the red as per the behavior analysis. Yes. Then this is the week with the mixed March month final days and April month's first week of few days. Anyhow, this is going to be very shortened week because of 2 holidays falling in this week for Tuesday and Friday. With these 3 days in the current week, the markets may not be having any clear direction. What we are suggesting you all, particularly for the day traders with a safety approach who are all having, may be asked to stay away from the markets, and you can apply a wait and watch formula until the markets clearly getting signal for the any single side of movement. The risk appetite traders can involve in the markets, whether it is for the day trading or any short-term trading, even for the medium-term to long-term investors also may participate in current trends by using the every dips, because it has now learned how to behave or how to react for the news and all, which are not having a continued manner where the markets may deploy the strategies like buy on dips and both the sell on rise as well near to the resistance point, and buy on dips means it is of course near to the important support points. So the day will be opening with a gap down manner, aligning with the weak trends across the global markets. Particularly the high impact is being seen on Asian region markets. After opening, there will be a chance for high level of volatility, because the markets currently between the range of 23rd of March high and low, as we have been discussed already, and the importance of 23rd of March high and low with a 2 consecutive close above or below the point will dictate the or will direct the trend for the market going forward, even for the midweek of until the midweek of April, that is mid month of April we can say, and that is not happened yet, but first one signal, partial signal we got already, because the market already closed above the 23rd March high once, but it could not sustain and fallen immediately to the next day below the level of 23rd March high. So the next one to be watched out will be the 23rd March low, that was recorded as 22,450 arrow. If the low is getting broken, there is a clear observation required. Just breaking the low is not enough. That may be hunting the stop loss, but the closing is very important. Very important thing you have to notice is the close below or above the level what we have been mentioning should happen for getting confirmation. Even that is positional means consecutive 2 close is required. So that is what we are spreading that means advising you all to follow the concept for getting a clear confirmation. So until then, the volatility between 23rd low point and high point might be running the markets or moving the markets without a clarity, without a direction, but with a heightened volatility. That's why we have advised to maintain a wait and watch formula for the safe traders, particularly for the day trading activities. From the positional aspect, until the NIFTY closing above 23,740 as an interim behavior shift zone. This behavior shift zone, where and all we are mentioning and discussing or insisting, means that is the core point which has many times proved acting well, and which is only we are keep updating you with the notation of behavior shift zone, whether it is interim or a core one. You should be mining about where this behavior shift zone is acting like that. The interim behavior shift zone, that is now called as 23,740, or as a whole you can take it as 23,700. After closing above, only the positional based bullish kind of behavior can be seen on the chart. till it is reaching 24,700, almost 1,000 points of rally can be expected. Once it closes about 23,740 for the consecutive 2 days. In case if it is being oscillating below the point of 23,700, you can expect the chance for making 21,800 on the chart would be rising once the close below 23rd March around 22,450 happens for the consecutive 2 days. This is very simple. On the sectors front, major sectors includes bank, energy, metal, finance, pharma, defense, oil and gas, realty, till even IT, capital goods also may be added. Will be having an impact of moving with a heightened volatility manner, particularly with a sell-on rise, except for the sector pharma. On the stocks front, based on news, the stocks include Coal India, NTPC, JSW Limited, Retail Corporation, Neyveli Lignite Corporation India, Dilip Build Construction. These stocks can be focused by the day traders. Keeping stop loss, strict stop loss is required because of the volatility is predicted to be very high. So that's it from today's pre-market discussion. Along with the monthly discussion also we made almost for the month of April. So this is the phase turn, first time for the Nifty and the Sensex. Based on the recent years, it has recorded about the bullishness in the March. Keep a note, and we have predicted for 2027, and if it is having the confirmation by closing in a negative manner for 2027, chances for making a lower return or a capped return for the Nifty and the Sensex till 2029 or 2032 even. We can see the queries which has been asked now. Small cap investment, yeah, that is good idea if you want to take risk and get higher reward, because overall taking higher risk will be rewarded higher as well. So for that purpose, you can, based on the long-term perspective, at least for the 6 month to 9 month perspective, you can approach a quality fundamental oriented small cap stocks, and it is of course required to be watch out the fundamentals of the company's business as well as the numbers under the financials of the company. Then you can think of the technical levels, whether it has been corrected well or not. Like there you can start investing on the small cap, but not advised to allocate your entire capital portion on the small cap only. It would be prudent to maintain a split strategy on the investment, like at least 40% on the large cap. Then based on the remaining 60%, you can make which one is up one for you. And for that 30-30 or 40-20, whatever the thing may be, the portion can be based on your risk appetite. But at least 40% should be there. If it is 50-60 also, will be on a good one only. So that would be the advice for your query on small cap investment. Yeah, you can of course start from this current level. It is of course in the buying zone currently. IDBI Bank can be hold for long term, like the question asked here. Of course, you can add further even, and you can keep holding the IDBI. And whenever the dip around 10% or higher it is happening, you can even further accumulate the stock. That means purchasing another additional portion of the shares on the IDBI also can be done. Silver for long term, yeah, based on our earlier advices, based on the behavior analysis, the silver and the gold, particularly for the silver, the growth is still having a potential to have 100% from the current level. Like we have first time informed during 2024 December, that was my first meeting with this company. Based on the query asked on the silver, that time we have advised the silver that was trading around the 80 plus range. We have suggested the 100% probability, or at least 1,50,000 or 1 50 per gram price can be expected on the silver, like we have mentioned, and we have already during the 2025 meetings here few times explained the proof of how it has reached the target of 1,50,000 or 150 per gram. Likewise, we are now again insisting the point, if you want to 100% return oriented potential investment, it would be on the silver side. So you can start investing with a multiple shots of investment. You should not just park your all the funds into the silver in the current prices itself and keep waiting for the 100% return. It would be prudent to, even from the price jump, we are predicting the current price to 100% price probably happening on the silver. Anyhow, if you want to more than 100% return, it would be better to accumulate where and all the silver is giving a dip, at least with the 3% also, if it is giving, you can start accumulating further. That is what the suggestion for silver. 100% return potential is there. Thank you for your queries. We'll meet again in the same pre-market outlook discussion on Wednesday, the 1st of April. Wishing everyone to have an opportunistic day today, because it is the hunting day for the buyers. Enjoy. Bye-bye.